Hello, my name is Cameron Paz, and today I will be presenting a financial analysis comparing Macy's and Nordstrom. We'll explore several areas of financial performance to understand which company is stronger in the stronger position as of 2025. We will begin with the common size financial statements. Macy's has maintained a stable gross margins around 95 to 60% and has seen improvements in liquidity, especially in 2021 and 2022. Nordstrom, however, shows declining cash reserves and rising accounts receivable, indicating potential issues with liquidity and credit policies. Looking at trends from 2020 to 2024, Macy's cash position initially improved but has since declined slightly. Revenue is slightly recovering but has not returned to pre-pandemic levels. Nordstrom's trends are more concerning, such as from cash declining consistently and receivables rose sharply. Revenue has also not recovered to 2020 levels for Nordstrom's trends. Now focusing on Macy's short-term liquidity, the company consistently maintained a current ratio above 1. Its quick ratio, though lower, improved over time. Macy's working capital remains positive and inventory turnover was efficient, showing good operational control. However, for Nordstrom, the story is different. The current ratio hovered around 1, with some years below that threshold. Quick ratios were weaker and working capital was negative for multiple years. Although Nordstrom shows decent inventory turnover, the steady rise in receivables is a red flag. In terms of capital structure, Macy's total debt ratio peaked in 2021 but has been declining, suggesting deleveraging. Long-term debt to equity remained moderate, around 0.5. Nordstrom, by contrast, maintained a consistently high long-term debt to equity ratio exceeding 2.5. This raises concerns about financial flexibility. Our DuPont analysis focuses on the equity multiplier. Macy's showed extreme volatility in the earlier years due to low equity, but that has since stabilized. Nordstrom's equity multiplier, however, remained low or even negative, suggesting potential issues with equity levels that may distort ROE calculations. Moving to the forecast, Macy's revenue is expected to grow about 3% annually through 2026. Its outlook is relatively optimistic with stable cash and receivables. On the other hand, Nordstrom's revenue is projected to decline, and while cash is expected to slightly increase, this may not be enough to reverse the broader challenges. Key favorable factors for Macys include stable liquidity, moderate use of debt, and strong cost control. On the downside, the company remains vulnerable to changes in customer demand and has recently experienced a decline in its cash position. For Nordstrom, brand equity and solid inventory turnover are strengths. However, these are outweighed by unfavorable factors like consistently negative working capital, high debt, declining revenue, and rising receivables, which could affect liquidity and credit risk. In conclusion, Macys demonstrates stronger financial health, its liquidity position, debt structure, debt structure, and growth outlook all make it a more attractive option for a long-term investment. Strategically, Macys should continue to expand its digital presence and optimizing inventory management. For Nordstrom, success will depend on its ability to restructure. The firm should focus on reducing long-term debt, tightening credit policies, and modernizing operations to improve profitability and regain investor confidence. And for the last 3 slides, we will go through more of the charts that helped me go through the conclusions that I ended up with in the previous slides. So for this first slide, we are going to go into cash and equivalents trends. This chart illustrates the cash trends of both companies, Macys and Nordstrom's. Macys improved in its liquidity significantly after 2020, while Nordstrom's cash levels steadily declined. This trend supports our earlier liquidity analysis that we previously talked about. Another one of our charts that we're going to go over is the current comparison chart. Here we see that Macys' current ratio remained consistent above 1, which is a key benchmark for short-term solvency. Nordstrom provided or improved slightly, but still lags behind Macys' performance within the current ratio comparison. And lastly, we will go over the forecasted revenue chart that goes through the 2025 to 2024 forecasted charting from our previous that we've already looked at 2020 to 2024 chart from our financial statements from Macys and Nordstrom. So from this forecasted revenue from 2025 to 2026, this final chart shows the revenue forecasted for both companies through 2026. Macys is on an upward trend, on a good trend, while Nordstrom revenue is projected to decline. This further reinforces the recommendation that to invest in Macy's over Nordstrom. And in conclusion, thank you for your attention. I'd be happy to answer any more questions. And I hope that this helped with if you were wanting to invest in any companies such as Macy's and Nordstrom. Thank you.